The Bank of Japan are prepared to consider monetary easing according to the meeting minutes for May as the central bank seeks to control an economic downturn. I've invited Lutz Karpowitz, Director of FX Strategy at Commerzbank, to join me on the phone now from Frankfurt, Germany. Lutz, the Bank of Japan meeting minutes suggested that the European debt crisis could hurt Japan's economy. The Japanese Prime Minister also told the G20 conference this week that the yen is appreciating rapidly amid the fallout from the euro crisis. If we take a look at the US dollar Japanese yen or even the euro yen, what movements are we seeing, and are you anticipating further rallies from these pairs?
Well, first of all, we have to summarize that the BOG minutes released last night and the trade data for May, which has also been published, they pretty much fit together because we know that the BOG is concerned about a possible impact from the European debt crisis to the Japanese economy, and the trade data revealed that for the first time since 1979, Japan recorded a trade deficit with the European Union. So this is pretty much in line, and obviously it shows that there are concerns within the Japanese authorities that strong yen would hurt the export sector's competitiveness, and that's why we always get these verbal interventions, or why obviously BOG and Finance Ministry are supporting a weaker yen.
Attendees at the May meeting held prior to the Greek elections also expressed concern over falling stock prices. How long do you think the Bank of Japan can and will hold off on adding liquidity to the markets?
Well, yeah, it's one possibility is always to add liquidity, because we know that we call these quantitative easing measures, and we know that this quantitative easing is not very much in favor of FX markets. So whenever a central bank is using quantitative easing measures, usually the currency comes under some selling pressure. So that's one possibility to come to a weaker yen. And on the other hand, we know that the Bank of Japan is always starting to intervene directly on FX markets. Usually what we see is verbal interventions in the beginning. And if this doesn't really stop the appreciation trend, then usually the Bank of Japan is intervening and buying dollar yen, for example. So, and they can obviously do this because the injection of liquidity is not a problem as long as you have deflationary tendencies in your economy, and you do not have to fear inflation too much. And this definitely is the case in Japan. On the other hand, these measures will not boost your own economy, because it's you're just raising liquidity. If yields are anyway very low and interest rates are very low, this would not boost your economy at all.
There are also fears of a mass exodus of foreign investment from the Japanese government bond market, a record 8.3% of which is owned by international investors. It seems as if investors are happy to flood the yen in times of market volatility as a safe haven currency and allocating capital from afar, but are more cautious about investing in the country itself. Is this a clear sign, do you think, of the current economic sentiment?
Yeah, I mean, to be honest, it's the fact that the Japanese yen is one of the biggest safe havens worldwide doesn't perfectly fit to the economic shape of Japan. I mean, we know that the economy is not really booming, and we know that the debt load for Japan is also very high. But what we see is that, of course, it's one of the biggest, deepest financial markets, and for a safe haven you always need a very high level of liquidity. And on the second point is that traders are simply used to the pattern that the yen, for example, will appreciate if uncertainty rises. So whenever you get some bad news, it's some kind of used long-term behavior of traders just to buy the yen, and that's why we see this pattern as a safe haven. And I guess that this is currently the main driver for dollar yen, for example. I mean, last night was a good example because the trade data and the minutes didn't really move the dollar yen rate, but later on we saw even some kind of depreciation of the yen against the dollar, because we had some fears or some speculation about quantitative easing measures implemented by the Fed later today.
That's all we've got time for right now, but stay tuned to Dukascopy TV for all of your exclusive interviews. Goodbye for now.